Elon Musk is the richest person on Earth with over $744 billion in net worth, yet he can't actually spend most of it. His wealth exists almost entirely on paper, locked in Tesla and SpaceX stock that would crash if he tried to sell. The difference between his net worth and actual spending power reveals the biggest illusion in modern wealth: the paper billionaire reality. Let's destroy a myth right now. Elon Musk does not have $744 billion sitting in a bank account. He doesn't have $744 billion in cash, gold, or anything he can actually touch. The vast majority of his wealth exists only as numbers on a screen, stock valuations that could evaporate overnight. Here's the breakdown. Elon owns approximately 13% of Tesla, which at current valuations makes up roughly $270 billion of his net worth. He owns about 42% of SpaceX, valued around $460 billion based on private funding rounds. Add some other investments and assets, and you get to that $744+ billion figure that makes headlines. But here's what those headlines never explain. He can't access that money. It's locked behind market mechanics, SEC regulations, and the fundamental laws of supply and demand. If Elon tried to sell even 1% of his Tesla holdings tomorrow, the stock price would tank, destroying billions in paper wealth instantly. Think about it this way. Imagine you own a house worth $1 million, but the moment you try to sell it, buyers only offer $600,000. Was it ever really worth $1 million? That's Elon's situation, but with hundreds of billions of dollars and infinitely more complexity. How stock wealth actually works. To understand why Elon can't just be rich, you need to understand how stock ownership works at this scale. When you own 100 shares of a company, you can sell anytime. When you own 13% of a trillion-dollar company, everything changes. First, there's the regulatory nightmare. As CEO, Elon can't just sell Tesla stock whenever he wants. He has to file SEC forms announcing his intent. He has to follow trading plans. He has to wait for trading windows. Every move is public and scrutinized. Second, there's the market impact problem. When Elon sells Tesla stock, the market interprets this as a signal. Why is the CEO selling? Does he know something we don't? Fear spreads. Other investors sell. The price drops. In late 2021 and 2022, Elon sold roughly $40 billion in Tesla stock, partly for the Twitter acquisition, partly for taxes. What happened? Tesla's stock crashed from around $400 to $100 per share, wiping out over $700 billion in total market value. Elon selling actually destroyed more wealth than he extracted. This creates a prison of wealth. The more stock you own, the harder it becomes to convert it to cash without destroying its value. Elon's $270 billion in Tesla stock might only be worth $150 billion if he tried to sell it all. The SpaceX paradox. SpaceX makes this even more complicated. SpaceX is private, meaning its shares don't trade on public markets. So how do we know Elon's stake is worth $460 billion? We don't. Not really. Private company valuations are based on the most recent funding round. When investors buy a small percentage of SpaceX at a certain price, analysts extrapolate that across all shares. SpaceX's latest valuation reportedly reached $350 billion, and with recent growth, estimates now push it even higher, making Elon's 42% stake worth roughly $460 billion on paper. But that valuation is based on maybe 1 to 2% of the company trading hands. If Elon tried to sell his SpaceX stake, who would buy it? Who has $460 billion liquid to acquire 42% of a private aerospace company? The sale would require board approval, regulatory clearance, and months of negotiation, and the final price would certainly be substantially lower than the paper valuation. So Elon's SpaceX wealth is locked behind even more barriers than his Tesla wealth. It exists as a number derived from a small transaction extrapolated to absurd scale. If you're realizing that billionaire wealth works completely differently than you thought, hit that subscribe button. We're exposing the mechanics of wealth that the rich never explain. What Elon can actually spend. So if Elon can't access his stock wealth, how does he actually spend money? How did he buy Twitter for $44 billion? The answer: leverage. Elon doesn't sell stock. He borrows against it. Banks will loan you money using your stock as collateral. If you own $270 billion in Tesla stock, banks will loan you $80 to $120 billion at low interest rates because the stock backs the loan. If you don't repay, they seize the stock. This is how Elon maintains liquidity without selling. He takes loans secured by his Tesla and SpaceX shares. For the Twitter acquisition, he borrowed heavily against his Tesla position, which is partly why Tesla's stock crashed. Investors worried about what would happen if Elon defaulted. But borrowing has limits. Banks want the collateral value to exceed the loan by a significant margin. If Tesla stock drops 50%, Elon faces margin calls, demands to either repay loans or put up more collateral. This happened in 2022. As Tesla crashed, Elon faced potential margin calls on billions in loans. He had to sell stock to reduce debt, which caused Tesla to fall further, which created more pressure. It's a vicious cycle. So Elon's actual spending power is maybe $40 to $60 billion at any given time, the amount he can borrow without destroying his collateral's value. That's still absurd wealth, but it's less than 1/10 of his net worth. Why this matters? This distinction between paper wealth and liquid wealth is crucial for understanding modern billionaires and why wealth inequality statistics can be misleading. When we say Elon Musk is worth $744 billion, we're not saying he can spend $744 billion. We're saying that if you multiplied his share count by the current stock price, you'd get $744 billion. But that number assumes he could sell all shares at current prices, which is impossible. The real wealth, the wealth that matters for actual economic power, is far less. Elon's true economic power is probably closer to $100 to $150 billion, the maximum he could extract over several years without destroying the underlying value. That's still obscene wealth, but it's 1/5 of his net worth. It changes the conversation about taxing billionaires and wealth inequality. If the government tried to tax Elon's unrealized gains, he'd have to sell stock to pay the tax, which would crash the stock, which would destroy the wealth being taxed. The wealth exists because it's not being accessed. Accessing it destroys it. The wealth trap. Here's the irony. Elon Musk has less liquidity than many people worth 1/100th his net worth. A person worth $5 billion in diversified assets can probably access $2 to $3 billion in liquid wealth. Elon, worth 150 times that, can access maybe $60 billion before facing serious problems. This is the paradox of concentrated wealth. If your wealth is diversified, you have liquidity. But if 98% of your wealth is locked in 2 companies you founded and lead, you're trapped. Elon can't diversify without destroying value. If he announced he was selling half his Tesla stake, Tesla would crash. His $270 billion stake would become $150 billion overnight, so he stays locked in, riding the volatility. When Tesla soars, Elon gains $100 billion in a week, none of it real. When Tesla crashes, he loses $200 billion in a month, none of it real. The wealth exists in a quantum state, simultaneously massive and inaccessible. And here's the final irony. The companies are worth more with Elon locked in. Investors pay premium prices for Tesla because Elon's vision leads it. SpaceX is valued so highly partly because Elon's all in. The moment he tries to exit, the value collapses. His wealth is both massive and imaginary, both real and inaccessible. It exists because he can't touch it. Elon's $744 billion exists mostly as an accounting fiction, paper wealth he can't actually spend without destroying it. If this changed how you understand billionaire fortunes, subscribe now and comment which billionaire's real wealth you want exposed next. See you in the next one.